Let's have a quick look at the three different formats of cash book. The first type is single column cash book where only cash transactions are entered. Your left side would be your debit side and the green side, right side, will be your credit side. The second format is a dual or two-column cash book which includes only columns for cash and bank. So here we enter only cash and bank transactions. Moving to the third type, which is called a three-column cash book. And here we enter only cash, bank and cash discount transactions. Now when it comes to cash discounts, there are two types of cash discounts: discount received and discount allowed. Now here you can see on the debit side, you have columns for discount received, any cash received, any bank transactions which influenced the business. On the credit side, if you had allowed any discount to your customers, any payments made by cash, any payments made by bank, all these appears on the credit side of your cash book. Basically, we enter all the inflows on the debit side and all the outflows of cash, bank and discount allowed on the credit side. Now we will move in detail to complete a single column cash book and then to the dual column. Assume you are running a trading business. There are few transactions that occur during the month of January 2006. Now, on 1st of Jan 2006, cash balance 2000. Now here you can see that you have an opening balance of cash 2000. So basically what I wanted you to do is to identify whether it's a cash inflow or a cash outflow. Remember, we are completing a single column cash book today and only cash transactions will be considered in order to complete a single column cash book. So if you find any transactions which are not in line with any cash transactions, you simply ignore in order to complete a single column cash book. Now, let's see whether it's a cash inflow or an outflow. So I'm giving you a few minutes to think and identify which transactions will appear on the debit side of a single column cash book and which transactions will appear on the credit side, and do you find any transactions which do not reflect in a single column cash book. So your time starts now. Now, let's see which one of them will appear as a cash inflow or outflow. In order to do this, children, you should have an understanding of what comes into the business and what goes out of the business. Now, the first transaction, cash balance 2000, it's already with you. Therefore, it will be a debit balance. So for opening balance, we are not going to consider double entry. So normally cash balance has a debit balance. We already went through when we were checking your prior knowledge. Moving to the next, cash sales. So what comes in? So here we draw diagram for all of them for what comes in and what goes out. So marking these as credit and the red ones as debit. Now let's look at the transaction which occurred on 10th. Now cash sales final. So you received cash and sales account credit. Now here you purchased inventory. Here you paid for electricity. Here you made a sale on credit, not by cash. Here trade receivables have paid you cash. Now in each of these circumstances, now when you purchase, cash goes out. Purchases, electricity, sales, trade receivable. I'll give you the reason why I had circled these. Now, when you purchase, purchases account debit and sales account and cash account, you credit it. Now, when you're paying electricity, cash goes out, therefore cash credit. And what did you pay for? You paid for electricity. So you debit electricity. Credit sales. Now here you sold on credit to your trade receivables. So you debit your trade receivables and you credit sales. And when you receive cash from your trade receivables credit and cash account debit. Now you can see that transaction number 1, transaction number 2 appears and transaction number 6 appears on the debit side of your single column cash book. So transaction number 1, transaction number 2 and transaction number 6, these are all cash inflows. And when you compare the rest, transaction number 3 and transaction number 4 are all cash outflows. So if you know to classify this, you will be able to complete your single column cash book easily. Now, can you identify which transaction doesn't appear in a single column cash book? You can see over here transaction number 5. It is excluded from preparing a single column cash book because the two variables that impacts trade receivables and sales, both of them does not apply to a single column cash book. Now let's see how we are going to post the entries. Posting double entries to a ledger. Steps. Make sure to select the correct ledger and then select the correct side and then follow these. Write the date, opposite account name, followed by the amount. Now I've taken one of the example transactions that I had given in the previous session. So 10th Jan 2006, cash sales 500. Now first of all, you should have a clear understanding of the double entry. You debit your cash account and credit your sales account. Now in this case, cash account is your single column cash book. So you can see I have a single column cash book here, my debit side and credit side, and then I have a sales account. Now am I done with the first step? Did I select the correct ledgers? Yes. And then now I had to choose the correct side of the ledgers. So I go to my single column cash book, right? I enter it on the debit side, 10,106, and then I write opposite account's name, which is sales. And what's the amount? The amount is 500. Right? Make sure to leave a line because we need to write the opening balance. So let me leave a line and write it on 10th of 1st, 2006. You can see this transaction date and then opposite account's name, sales, and the amount is 500. Now, did I follow these steps? Did I write the date? Did I write opposite account name and then the amount? And I chose the correct side of the account. Now, the same applies when you're entering this in the sales account. So, you enter it on the credit side. It occurred on 10th of Jan 2006. My opposite account's name is cash and the amount is 500. So, I chose the correct account. I chose the correct side, credit side, and then I followed the correct sequence, which is date, opposite account's name, and then the amount. Now, this is how you complete a single column cash book, right? If we look at the previous transactions on this date, whenever you enter an opening balance, you enter it as balance brought down. As per the question, you had an opening balance of 2000, so you enter that amount in your cash book, so which is 2000. So likewise, you enter the transactions in a single column cash book. At this stage, it is not required to prepare the other ledgers. I expect you to complete the single column cash book, enter all the inflows on the debit side, all the outflows on the credit side, and then you balance the ledger.